Of investor appetite in the private markets, while Wall Street has seemingly left the renewables trade for dead, the private markets are stepping up to fund the clean energy transition. Pippa Stevens is here with those details. Who and where, Pippa?
Yeah, Kelly. Well, starting here with the public markets, because if you look only at clean energy stocks, you might think the trade is all but dead based on heavy losses. But in the private market, investment is actually booming, including from private equity funds. 5 years ago, the value of PE deals in energy transition was $500 million. Last year, that number was nearly $26 billion, according to Mike Collier at financial advisory firm Weaver. Now, wind and solar still attract the most dollars, but the ecosystem has become broader, with renewable fuels, EV-related technologies, and batteries seeing more investment. PE plays a critical role because they're a stepping stone of sorts for companies that have outgrown venture capital but aren't yet ready for public markets. Now, Collier did make the distinction that a lot of these deals are investing upfront in infrastructure buildouts rather than acquiring companies outright. And so essentially, they're getting a foot in the door now in the hope of bigger returns later. But PE is very disciplined when it comes to those returns. So he said the fact that they're even able to raise money specifically for energy transition investments, Kelly, is a good sign for the industry.
Is it just a lagging thing, possibly, where, the returns for clean energy, maybe go back a couple years ago during the pandemic, were pretty good in the public markets, and that's since collapsed? We talked about how they're down big over the past year. Could the same hit be coming for some of these companies that have had big private equity investments?
So I think what we've seen a lot of PE deals being done on the infrastructure side. And so that's something like, you get pretty steady longer term returns because you have that power purchase agreement, say, but they're not taking bets on what is going to be the next new hot technology, because on that front, we just don't know yet. And I think that the SPAC boom and subsequent bust definitely did a disservice to some of these companies, some of these newer technologies. And it was basically just they were not yet ready for prime time. They should have stayed private for longer, and they needed a little bit more of that hand holding to get them to the public markets. And so I think the next stage of PE investing in energy transition will be greater technology bets, but we're just not quite there yet.
Interesting. And also, Charlie Babrinsko yesterday said, given the low valuations of some traditional energy names like Apache, he's expecting an LBO wave there. Whether or not those partners are interested, and they might not be interested in the energy per se. A lot of them do like the transition, but at 3 times earnings, they might say, look, the financial returns are too attractive to pass up.
Yeah, and we're seeing the energy transition side grow, but also traditional energy. A lot of these companies, the KKRs, the Apollos of the world, they have feet in both sides of this.
Right.
So where there's money to be made, they're going to go.
Right, exactly. Pippa, thank you. Pippa Stevens.